Hurricane financial impact. Jamaica and the Caribbean. The financial threat and hurricane routes. Are you prepared for the storm? Hurricanes are not just a weather event. They are financial disasters waiting to happen. The secret to survival isn't just shelter. It is strategic financial preparedness. We will show you how to shield your wealth from the wind. The Caribbean hurricane season is a period of high risk for millions, and nowhere is this threat more significant than on islands like Jamaica. While we see the devastating pictures of wind and water damage, the real cost to governments, families, and businesses is often underestimated. We are talking about billions of dollars in damage, destroyed infrastructure, and years of economic recovery. The goal of this video is to analyze the financial impact of these natural disasters and provide actionable steps to protect your personal finances before a storm hits. Let us first understand the danger zone. Hurricanes originate in the Atlantic and typically follow specific paths. Jamaica and the Eastern Caribbean islands are often directly in the path of the most destructive storms. These storms usually move west or northwestward, threatening Cuba, the Bahamas, and eventually reaching the U.S. coast, especially Florida and the Gulf states. When a Category 4 or 5 storm, like the recent threats the region has faced, makes landfall on a small island nation, the financial damage is catastrophic, immediately affecting more than half the population. This scenario highlights the unique financial vulnerability of countries like Jamaica. Their economy, heavily reliant on tourism and agriculture, can be completely derailed by one major storm. The country's fiscal stability is constantly at risk, demanding massive international aid just to rebuild. Government and personal expenses. The costs associated with a major hurricane are divided into two staggering categories: the national burden and the personal expense. The government's staggering burden. When a catastrophic storm hits, the government of Jamaica faces immediate, critical expenditures. First, emergency response and evacuation. This involves setting up over 800 emergency shelters, deploying aid, and evacuating vulnerable populations from coastal areas, costing millions of dollars in resources and logistical support. Second, infrastructure rebuilding. Hurricanes often bring torrents of rain, causing widespread landslides and flooding, rendering critical roads impassable and destroying public utilities. The government must fund the rebuilding of roads, bridges, power grids, and water systems. This takes years and pushes the national debt higher. Third, economic output loss. The tourism sector immediately shuts down. Agricultural yields, such as banana and sugarcane crops, are wiped out. The loss of economic output alone can slash a significant percentage off the annual GDP. This structural vulnerability means a small country's entire financial recovery hinges on external disaster bonds or international aid. The personal financial hit. For individuals, the financial preparation is the only shield against ruin. The cost of recovery without proper insurance is crippling. First, insurance. Many citizens in the Caribbean struggle with the high cost of comprehensive property insurance. Home insurance that covers hurricane damage can be very expensive, often including high deductibles, the portion you pay out of pocket before coverage kicks in, sometimes as high as 2% of the home's value. Car insurance policies may cover storm damage, but often require specialized riders. Second, uninsured losses. When people lack sufficient insurance, they must rely on their own savings or, worse, emergency loans to rebuild. Federal disaster assistance, when available through agencies like FEMA in the U.S., often provides only minimal relief, with the average grant covering only a fraction of the total damage. Financial preparedness and conclusion. So, what are the most crucial financial steps to take to weather a storm and ensure you have more money when the recovery begins? Build a hyper reserve. Your emergency fund must be robust enough to cover at least 3 months of living expenses plus your insurance deductible. This is the first cash you will need immediately after the storm for food, temporary shelter, and cleanup supplies. Review insurance coverage. Call your agent today. Do not assume your basic homeowner's policy covers flood or wind damage from a named hurricane. Understand your deductibles for named storms. Get flood insurance if you are in a risk area. If you rent, get renter's insurance to cover your belongings. Inventory and document. Create a detailed inventory of your home, photos, receipts, and store it in the cloud. After a storm, having this documentation accelerates your claim process dramatically, getting you access to funds faster. Cash reserves. During and immediately after a hurricane, power outages render debit and credit cards useless. Keep a small but adequate reserve of physical cash stored in a waterproof, secure location. The devastation caused by hurricanes is not only a humanitarian crisis, but a powerful financial lesson. The future for the Caribbean involves investing heavily in resilient infrastructure and climate risk financing. For us, the individual, the lesson is clear. Disaster preparedness is, first and foremost, financial preparedness. We must be proactive. If you found this financial analysis helpful and want more strategies to protect and grow your wealth, please leave a like and subscribe to the channel. Share this video with anyone who lives in a coastal or hurricane-prone area. The goal is always to get you more money. See you next time.